Fantastic. Over to you for 5 minutes on fundamentals, Lexi.
All right. So, okay. So I'm just going to share a screen really quick so I can go through the stuff. And this is my screen. Number 2. Okay.
I know when we say this, it sounds really slow and all, but honestly, you'll be amazed at how clunky Zoom is to use at times. And the controls hide behind your charts. So you bring a chart up and the controls hide behind it. It makes it really hard to use Zoom. So that's why there's always this little hesitant voices while we're doing this stuff.
That's true.
Back to you, Lexi.
All right. So review of last week, I was focusing on the dollar Sing also because it's a happy national day today. We caught this level on the weekly time frame, and I managed to get in on a smaller time frame. And again, I'm still focused on the dollar Sing, not because it's National Day, but the fundamentals, like I said, don't change within the week. It will take kind of some time. So I'm also continuing last week's focus by looking for more opportunities on dollar Sing this week after the retracement. Now, let's talk about the US dollar a little bit. Now, this is the trade-weighted US dollar index, and I'm talking really fast because I've only got a couple of minutes. So too bad, guys. You got to just listen really closely. All right. So this is the trade-weighted US dollar index, which means it's weighed against a basket of the other currencies, right? So if you actually compare this, we actually see that the US dollars has kind of appreciated against the other currencies, regardless of how the situation has been going on. So what we're going to look at now, let's compare this against emerging market currencies versus US dollar. As we all know, emerging market currencies has not been doing really well, right, over the past years. But curiously enough, if you want to compare it against developed market currencies versus the US dollar, you can also see that the direction of the currencies doesn't seem as fantastic as well. All right, now this is a particular reason for this is because the weakness for basically every other nation's currency against the US dollars, traditionally, because a lot of these current countries, they hold a trade deficit with the US, which means the countries actually sell more goods to the US than they purchase from the US. So this creates the deficit, which kind of slowly snowballs, right? So ironically, even if there is a trade deficit between two nations other than the US, it can still kind of cause the US dollar to appreciate because, right, the logic is that the country that runs a trade surplus buys US treasuries with its excess holdings. So basically it's because, US dollars is being used everywhere, right? And if we actually look at I actually looked up some statistics. 44% of payments over the SWIFT banking network are in US dollars, and the balance 61% of global foreign exchange reserves are actually in US dollars. So the next question is, what's actually driving the US dollar lower right now, despite all these other currencies depreciating against it? Very simple. Let's look at the treasuries. All right, this 3 lines over here is the 30-year Treasury Inflation Index security. So what this means is 30-year treasuries, and it is priced in for inflation. So you have the real yields minus inflation. And if we actually look at the current situation right now, you can see that we are actually in a current negative yield. That means you have already priced in inflation for this. So if we are talking about US having potential negative returns, so basically what investors are doing is they can see this, and what they're doing is selling the dollar for other assets. So the fall in the US real interest rates and the US dollar coincide perfectly with Ainsley's baby, which is the rise in gold price. All right, because if treasury yields are falling and people don't really want it because of negative yield, they go to gold. All right, and again, this is the gold chart over the past 10-15 years about gold, and this is part of the reason why people are shifting away from US dollars going to hard assets. All right, so I do kind of see continued increase in gold because of the way the entire situation is going in terms of global economy, and that's what we're looking at. Now, just popping a quick look, this, okay, it's a bit dark here, but this is the value of the COVID-19 fiscal stimulus package in G20 countries as of June 20. Right, so if we look at this, it means these are the countries that have created fiscal stimulus packages, injected money into their country via via monetary or fiscal policy, whatever. And this is the percentage of money they've pumped into our company and compared against their GDP size, right? So US is the biggest in GDP, but they've only got 13.2. Japan is ranked, I think, number 5 or 6 on the GDP scale. They have got the highest number of stimulus down there. And what I am interested in is the European Union over here. They are the third biggest GDP in the world. And they've only pumped in about 4.3% in terms of GDP. So my attention next week will kind of go to the euro dollar, okay, because that will be something that I do see continued strength in the euro dollar over the long term. Also backed off the weakness of the US dollar, as well as the European Union seems to be working together, and they look like they are probably going to do pretty okay as comparatively over the next couple of months. So I'm looking for euro dollar next week. All right, that's my 5 minutes up, and over to you, Paul.
Actually, I've got to ask. We've got a few minutes. Julian's held up
Right.
on the way. So,
Awesome.
you can hear me okay?
Yes, can hear you fine.
Fantastic. Hey, so the thing is this, right? So, Europe's only put in 4.3% of GDP for stimulus, right?
Yes.
And the US has put in 13% of GDP for stimulus. And we're seeing the US dollar fall because they're just creating more and more money. And when you create more of something versus something else, the value of that falls. It's basic supply and demand, economic sort of stuff. Correct?
Yes, correct.
So you're watching euro dollar, and what we have is euro, which has put in a lower percentage rally versus the United States. But what do you think the chances are that the European Union comes to the table in the next month or 2 months and drops that from 4.3 and pushes it out to 8, 9, 10%?
Well, I think we still have room. I think we still have a room for growth. Like if you can actually look at the euro dollars charts, like on a technical perspective, and that's where I think the benefits of the technicals come in. So I'm going to share the euro dollar chart.
Fantastic.
Okay. Yes, and of course that's that little pause there where I figure out which screen to share, and it will be this one. Okay, so if we look at the euro dollar, I think this is where the benefits of using technicals come in as well. And you can see that on the weekly time frame, this is the euro dollar on a weekly, and I zoomed it out a little bit. Okay, you can see this really interesting, I think this really interesting area over here. If you have looked at it, it's since 2008 till now. So we're talking about almost 10 over years of price. I think there is still a lot of room if it can just break above here on a technical level. So again, I'm zooming out a lot more. You can see that euro, it's been really soft for quite some time over the past couple of years, but it does seem to be gaining strength. And on the technical analysis point, it does have room to grow if it can break above this area. So I am looking for opportunities over the medium to long term, unless something funky comes up. But this is the potential movement of euro dollar. Yeah.
Sounds cool. Just hey, Gary asked why Germany and France are separate on the table. Are they shown separately and combined because of the size of them?
Yes, they are shown separately and combined because of the size. In the European Union, Germany is the biggest in terms of GDP size. I think France is second, Italy is third.
Okay.
Yeah.
Someone's asked if you can include the link source to the stimulus percentage of GDP. I think it'd be really good, Alexis, when you come on, if you can share. I saw you were on Fred for some of that.
Yes, I'm on Fred.
Some of that data. So a lot of that stuff comes off Fred. But if you could share a link where they can find that stuff, I think they'd really enjoy it. It's great to have you in the show.
All right, so I'll post the links in the chat box.
That would be wonderful. Thank you for that, guys. I've got 5 minutes before Julian joins us. I'm just going to do a quick. I'm going to get run through and check that he's not sitting in the attendee list waiting to get in. EFG, HIJ, no, doesn't look like it. Cool. So he's not far away, guys. Do you have any questions before we go to Julian? Otherwise, I will probably get Angie to pop in and talk gold. Actually, I might just ask the team who's in the room. One of the things that Zoom also does is move us all over the place with people. Okay, guys, week ahead. What do we got? Ainsley?
Hi there, Paul. How are you?